Well, guess what, Jolyn?
What's up?
We are officially live.
Totally. I was half-hearted because I had the feeling it was going to be too high pitched.
Oh, well, yeah, we didn't want to throw out the audio in the, in the headphones, especially since I'm
Yeah,
hearing
like this right now.
you.
Or I got to put mute on everything.
Well,
Woo, what's
what is up
good?
with everybody? Oh, well, I'm good. How are you?
I'm good.
Yeah, because we got to have a conversation tonight. I have a feeling that it's about to be. I switched to tea from water.
Mm.
Let that cool off for a second because this is about to be piping hot. So, what is up, everybody? I'm Mark Monroe, accompanied by my wonderful co-host, co-producer, and co-creator, the wonderful
jolyngc in the place to be. Add a little.
I add a little. Oh. And this is your come up. This is an episode in which that we get to talk about some markets, and then on top of that, some other things in between. So, of course, you've seen the title. So, of course, we're going to discuss a little bit about Facebook because it's time to have the conversation. But before we have that conversation, go ahead and hit that like button and go ahead and hit that subscribe button down below because we would totally be appreciative. And on top of that, if you want to be in the know, just like Reggie was first in the chat, welcome back, Reggie. We missed you. Go ahead and hit that bell so that way you can be a part of the notification squad, aka the Cool Kids Club. So, Jolyn, how are we doing in these markets?
Wait, let me say what's up to Reggie. Hey, Reggie. And I talk to people with the Ghana shout out for Etesen and Aquaba, all that. Let's get into it. What does it, cousins? We got the Dow coming in at 311.75 points. We had a bounce, y'all. That was a bounce. There's the S&P 500 coming in at 45.26 points, and the NASDAQ had a recovery at 178.35 points. The VIX came down a little bit to 21.30 points, and we have the 10-year Treasury note coming up a little bit, back to 1.545%. Heading over to sector performance, as you know, there are 11 sectors. We can keep track of the top three and the bottom three so we can see what that sector rotation is looking like. So we have financials, communication services, interesting, and tech coming in. Sorry. I couldn't resist. For the top three. Then the bottom three, we have consumer staples, utilities, and real estate. Out of those bottom three, I will note that utilities and real estate were in the red. Consumer staples was actually in the positive, but it was at the very bottom of the list. Then if we take a look at our pick performance, we got C-Web, Square, and DocuSign coming in at the top three. And then the bottom three would be Lucid, CACI, and ticker symbol EAT. So those are the ones that are at the bottom today. And let me just see something right quick, because I just want to make a note that SMH was playing the whole game. I do want to make a note of that. It's coming back up. But I was like, okay.
Relationships take time to get back in order.
That's how you're doing it. It's like you must think that couch is comfy. Anyway, so Mark, we do have some questions today.
Okay.
Along with this conversation.
Yes.
There's a lot of places we can start, but let's start with this outage, this shutdown, this, I don't know what you want to call it, but crash, whatever you want to call it. Facebook 6-hour timeout.
Oh, Facebook putting the world in timeout?
Let's talk about it.
Yo, I mean, okay. First, we'll start off with a little bit of, allow me to reintroduce myself.
Oh, Lord.
See, what I'm saying was, it's like, they brought Homegirl on 60 Minutes, and she had a very compelling story, and then all of a sudden, everybody just wanted to attack me. I'm like, whoa. It was just research. And then all of a sudden, it's like, yo, I just got in my feelings. So, you know what I just said? You know what? Let me just go ahead and just remove this DNS server real quick and then just like give everybody a break at Facebook because it was just too stressful. There was just too much bad energy. We didn't have enough sage candles for it all. So we just put everybody on timeout. We allowed we had to reset the room, reset a few groups. And then, hey, everybody, they ran over to Twitter and they saw exactly how that world was like. And
the shade of it all.
I mean, pretty much time over, time up, time out was over. And then, 2.5 billion people got that act right and they came back to the platform and all was Gucci. Okay.
Okay, that is one way to look at it, Mark.
That is one way to look at it.
That is one way. But those 2 billion people are not the ones who did, you know what I'm saying? Like, they didn't do anything. The 2 billion people that came back to the platform.
All jokes aside. All jokes aside. So if you've been like kind of like out of the loop a little bit, so Facebook has had some not so quite issues within media as well as across different conversations, and you're probably like, what else is new? True. So, but my shades are off. All right. So, but with that being said, Facebook had an outage. So apparently there was an accidental deletion of its DNS, aka domain name server, which if you delete that information, then pretty much it makes the domain itself unreachable. So it doesn't, like, it points towards a number, kind of like an IP address. It points towards a certain address, and then essentially that's how the Facebook.com or FB.com and all that other stuff, that's how it connects. So when that got deleted by accident, then essentially what happened was WhatsApp went down, Facebook.com went down, Messenger went down, Instagram went down. I think even Oculus went down. I think even it's going down.com went down also. So it was kind of like, what's going on? And then that's when we started to hear about, like folks were talking about, well, they got hacked, and it's kind of like hard to do that, especially like you have to have that internal information. So when you see something like that go down, it means that like if you have a web address and people are trying to connect to it, but if there is no domain name server on the back end side, it's not pointing you to anywhere. So essentially the services are down, and for folks that are trying to service it, all those Facebook emails are also tied to that same domain name service. So essentially it was just done for over the 6 hour period, and then essentially they came back up and everything was pretty much back up as if nothing happened. But things did happen, because you have to think about it. There's a lot of businesses that are tied to Facebook's platform. There are a lot of folks that use WhatsApp and Messenger to chat with folks from around the world. So it's like, believe it or not, people still get charged for data services as well as messaging services with their carriers internationally. So using a platform like WhatsApp allows them to literally cut that cost and be able to like be connected. So it really like showed you exactly like the breadth of Facebook's platform. And so, here we are today.
It might as well have been a tantrum as far as I'm concerned. Just the timing of it, the major, flex of it all, so to speak. Like, oh, okay, so that's how y'all want to treat us. Well, we're taking our toys and going home.
It's like, hey, go enjoy Twitter. And the funny thing about it was, Facebook was down like 5%, and Twitter was down 6.5% yesterday.
Shade of it.
And let's not forget about Snapchat too. Oh Lord. This tea fire, I'm gonna need to get some more of it though.
Oh, Lord. So anyway, there's a lot to be said about Facebook.
We can come back to that.
The whistleblower. We could talk about, just what Facebook, like what their role is in our society. I mean, clearly they play a major role. Like they're a part of our lives. Whether it's through Instagram, WhatsApp, or, Oculus or Messenger or whatever. But then without getting like too political though, I
can remove politics out of the way.
Yeah. Because I mean, there, when I think about the whole situation, first of all, you know how some people, I think, Mark, I think you're frozen. Are you
I
back?
I can hear you. No, there you are. There you are. I see
I
you.
can hear you. Okay, I hear you and I see you, but you're not moving. Okay, now it caught up. Testing.
I can
Okay,
hear
it
you.
caught up. Okay, it caught up. Maybe that was on my end. I don't know. I do have hella devices, so I keep looking over here and looking down. There's one, two, three, four devices that are, yeah, in play right now. Okay, so we look at, with the whole what the whistleblower was talking about.
Correct.
She was just basically saying that Facebook is well aware of
Yep.
what they were doing.
Yep.
Even when research showed harm, they still carried on. They're making decisions in their own favor, which, Mark, obviously you would say it's business, right?
Well, yeah. They're a
Okay.
business. I mean, they have a. I mean, here's the thing for folks like if you want like, Facebook is a business. It's
Mhm.
definitely a business in which that its primary role, like every other publicly traded company, is to literally bring in revenue and increase revenue, but also decrease expenses, aka improve profit margins. So that way,
Mhm.
essentially, your stakeholders or aka shareholders are their value is increased. That's the whole purpose of a company to literally flourish.
But at the same time, Mark, I mean, let's keep it funky because the transparency is lacking. Like if they from jumper, like, look, y'all, we're about this money. Yes, there's gonna be hate on our platform, but y'all are hateful. If y'all weren't hateful, it wouldn't be on the platform, right? They could easily be like that, but they're trying to play it off like, we're doing everything that we can to make sure X, Y, and Z doesn't happen so that there's not misinformation. But like if they would just keep it real and not put up this front like, oh, we're doing everything that we can. Like, don't try to be something that you're not. Like, just be who you are. Because clearly the reflection, like we were talking about this earlier, Facebook
Yep.
is a reflection of us, right? Of
Facebook is
humanity.
a reflection of humanity or society.
And right now, society is hella not cute. It's not cute. It's been struggling in the face for a while now. Like, I mean, let's not even get on just like the division, like the response
Yeah.
to things that we're not going to say, all of
Correct.
these things, the racism, all this stuff, like it is a reflection. And I'm not saying that Facebook has, bear the cross and carry the cross for all of humanity. I'm not saying that, but at the same time, they are profiting off this. And if they would just be transparent instead of trying to be, like, oh, we're doing all that we can. It's like, no, you're not. If you are doing all that you can, you're doing all that you can to your own benefit and to the detriment of society. If you want to be interwoven into society, well, then there are going to be some things that you also get to take responsibility for as well. And part of that, like none of this can happen. And, if we don't tell the truth, like that's part of the problem right there.
Facts.
Folks are lying. Folks ain't telling the truth.
Yeah, I mean, I think that yeah, Facebook has always had a habit of like, okay, hey, not we, and they respond. They respond after the fact that things have transpired and taken place, and it's kind of
Mhm.
like society has always wanted Facebook to be more proactive. But I mean, name another company that has really, or name other tech companies that have really been more so proactive to let folks know that okay, hey, these are the things that are transpiring. They're not. I mean, so it's like it's kind of interesting, and it's a little bit of irony that the world's biggest social media company, has a problem of being transparent with the people. Um, it's a challenge, and I think the interesting thing that you pointed out is that it ain't looking cute right now. Like if Keep That Same Energy was a person, then it would definitely be Facebook. I mean, because, think about it. If we have such a hard issue with Facebook, or if, like, you're looking at a company that's pretty much ones and zeros and, functions and, Node.js's and Clio, so many different, like, agnostic platforms that are tied to it, but it's just software. it's the people that literally make and fuel the social graph. It's the people that literally give forth a lot of the breadth of Facebook's platform. So I'm not telling everybody to like be like, I'm not on that whole camp of boycott this platform and anything like that. But what I'm saying is, it's like, it's the antithesis of what is it that we see in the world. So it's something in which that, is Facebook culpable? To a certain degree, yes. And it's like, one of the main arguments is that, like, do people feel good about themselves? Well, but let me ask you this. If Facebook didn't exist, so if Facebook, the platform, didn't exist, would we still have other mediums that do the same thing? Will we still have like folks that, that struggle when it comes to, how is it that they feel about themselves, how they see themselves due to, say, for example, specific norms? Because at one point in time, we blamed the fashion industry once upon a time as it pertains to how is it that young kids see themselves, and how is it that they how is it that they see their bodies? Then we also had, say, for example, I mean, let's be real. We also have reality television that has definitely played a role. We have so many different things that have come forth and literally presented themselves, and now it's like there's an actual dedicated platform for all these things to be housed in. So at what point do we look at, say, for example, the content creators, the folks that produce the content? It's like, I think that if we're going to nail Facebook against the wall, then we also have to look at the other things in which that we don't like about society and place those things up there against the wall right alongside it.
Yes, I agree. Like we all have, our roles to, I don't even like that phrase, whatever. We all have our roles to play in all this. We're all responsible to certain degrees. Not everybody is making money off this.
Correct.
Not everybody is, the facilitator, if you will.
Correct.
Of insurrection. Okay, like
that's a fact.
So we also have to, talk about that aspect of it. Yes, society, is hella ugly right now. Like super ugly. Probably, I don't want to say like the ugliest we've ever been, but I mean like all throughout history. Like there's always something popping off. Like people just can't be just good and mind their business. We get to look at that, but then also like who's making it easier for all the uglies to get together and just be evil and do all this stuff. Like
that's a
we
fact.
Also get to look at that.
That's a fact.
As well.
Interesting point though, and a lot of folks are like, and I mentioned this before we went on live, is that if you look at Facebook and what they're doing, like when you think about multiverse, that ain't. He ain't thinking about, like, say, for example, the folks in whom which that are, older. He's not thinking about them. What he's thinking about is the next phase of, that the generations that come after us, and what is their social landscape going to look at? What is that going to look like? And that's the challenge, because, for us, it's like, it's kind of like what our views and everything else, it's already set in stone. But for, say, for example, the next generation that will follow, it's like, okay, hey, can we, like, what does it look like when the world is more social and more open based upon, their mission statement? What does that look like?
What does it look like? But at the same time, what are they making it to look like? With the algorithms that are, promoting the worst, that are promoting, the negativity, because that's what elicits more emotion, more engagement, then it's like, okay, well, we got to look at ourselves too, because what is it about us, that's making it so that this is why are we so attracted, addicted, or whatever to the negativity? Like it reminds me of, sorry, spoiler alert, it reminds me of an episode of Ted Lasso where I won't say the name, but one of the characters, was getting all this shine in the media, and then it took one negative tweet for this particular character to feel some type of way and then act out like in real life. So it went from on the screen to off screen in real life to act up, and it's just like a series of that. But let me tell you this, I can't imagine a world where Jolene Jr. Is trying to find her value on social media. Let me tell you what's not gonna happen.
That's a fact. And it was interesting. But it's interesting though, because it's like, you know, I was having this conversation with some folks earlier today, some very astute individuals, and I was like, I said it jokingly. I said, shout outs to all the TVs out there that raised us. You're looking at a new world where essentially, your kids, and I'm not trying to scare anybody back home or anything like that. So let's just preface that. But the big thing is, it's like when we look at all these things as it pertains to innovation, think about it. You're going to be off 9 times out of 10. Like most parents are going to be out working at wherever place of employment is. And meanwhile, children are going to be out. Here are their areas of influence. You're going to have their school, their teachers, friends at school. Then on top of that, you have media. Then on top of that, you have community. And then at the same token, you have parents. Like that's 5 different touches from different sources of where, children have a potential to receive information that can really kind of like help shape their world. And it's kind of like in the sense of that once upon a time world that we once lived in, that world doesn't exist anymore. And you're going to start seeing over the next 5 to 10 years that world is going to start to even change even more, where it's like, certain things remain the same, but they take different shapes and sizes and, faces. And that's kind of like the nature of the beast there, because it's like, parents only get to spend X amount of time with their children. So again, who is going to be raising your children? That's the tough question. That is the major question. Like, and it's like, I always say this, I always like to give, at the same token, I believe that regulation, is definitely warranted, because I believe that systems should always be up to date and catch up with innovation. And I think it will. It's just moving too slow. I also believe that, I think I said it earlier this year. I said, remember this, ignorance is catchy. Mm-hmm. So it's very, very catchy in the sense that, when we see things that are just like completely negative or whatever it is, or just straight up ignorant, people flock to it for some reason. Once upon a time, it's like we revered, folks to whom wish that were smart. We revered intelligence and everything else. We adored it. And then now it's like we bully it. We antagonize it. We speak down upon it. And sometimes it's like even in the differences of opinion, we cancel it. It's like, and I think that, that's the part where we've gotten to the place in which that we really have to, like, if we look at Facebook, we must look at self. And what I mean by Facebook, and keep in mind, when we think about Facebook, you have to look at Facebook as like the overall driving engine, like for example, the algorithms, the social graph, and everything else that really helps connect the dots. Mm-hmm. But at the same token, and it's easy for us to look at all the negative, but also look at all the good in which that Facebook has also brought. Like think about how, like for example, you have a ton of kids out there that grew up on the spectrum of autism, where they have a platform in which, or they have platforms in which that they're able to actually learn to express and share and connect. Where you have a ton of businesses out there. If you think about it, 3 billion people that utilize this platform, and definitely a ton of startups and small businesses out there, to say, okay, hey, Facebook disappears, where did those businesses now go? And no tech company is exempt from this. I mean, when you think about like what, each and every single one of them have their own individual exploits, and we talk about all these great companies and what they do as it pertains to making money and revenue. But, look at Amazon, Amazon, and how is it that they lure people within their algorithms as it pertains to shopping? And when we look at Apple, think about like this, and this one's going to burst a lot of bubbles here. But just imagine paying $1,000 for a phone, and yet that phone has probably had more recycled parts in it. So, which means that you probably spent you probably bought an iPhone maybe twice or 3 times, and you paid for the same type of material. But yet it's like they still charge it at a premium. When you look at, say, for example, Twitter, like, how many of those users are actually real versus bots? Think about the fact that, we always say the internet is undefeated because of all the memes and everything else, but yet at the same token, think about how many folks have been trolled on such social media platforms. So it's again, yeah, like bullying. So it's like it's the thing. And here's an interesting thing. A friend of mine from college, Jessica, I think her name is Jessica Clemens. She started a service on Instagram where she could literally start helping people focus on their mental health. So she literally counsels people through Instagram. Jolene, are you there?
I'm here.
Okay.
You were kind of cutting out.
Okay. I'm here.
So your friend Jessica
Oh.
created something.
Oh, so she pretty much just allows her service to literally, she built a service on Instagram where she's able to help people and coach them and counsel them through mental health. Just straight through Instagram. And it's amazing to me how we don't see more services out there where it provides those things. I mean, but yet there's tons of small businesses out there where it's like, okay, hey, there's tons of small businesses out there that utilize these platforms in which that it ultimately provides for their families and everything else.
I mean, there's good and bad. One of the things that you were saying, like the influences on our kids and like who's really going to be raising the kids.
Yeah.
That is why the pep in the step, the fire under for the walkaway life is so critical. Like to me, it feels like by any means necessary, Mark. It really does, because we want to be able to have that type of positive influence in the lives of our future, right? We want to be able to create that future. And it starts with conversations like this. It starts with, the amount of time you put into research, like your portfolio, all those things, like it all goes back to that, because otherwise we are going to end up with the ugliness of the world completely amplified, and there will be nowhere to go.
I agree with that.
It'll just be an ugly, ugly place. And I hate to be like all doom and gloom, but like, golly.
Well, I guess we should ask the folks that are watching today, because I'm sure that we can go a little bit further in depth. I'd like to know if you guys would like us to actually like have a much more in depth, where we even bring on other thought leaders to start discussing like, technology and many other things, and bringing in other social issues and stuff like that, and discussing that, and also tying it together, like, because you know how we do at the Come Up series, it's all connected. But if you'd like for us to do that, go ahead and put either some type of positive emoji in the chat.
You should say which emoji it is, though.
Like, well, which one? Fire.
Put the rocket in there. Put the rocket, not the
fire.
The
rocket. rocket? Oh, so we're going to the moon, eh?
Yeah, put the rocket in there if that's what y'all want.
Okay, go ahead and put the rocket emoji in the chat, and we will check that out. So if that's something that you guys would like to explore, because we can definitely bring more thought leaders here, it would be an interesting conversation.
So we have some questions.
All right, let's do it.
All right. Let me see. So the question, man, people. I know you guys don't get that much space for your questions, but they really be trying to jam
it all into those characters.
Yeah, I gotta decipher codes and stuff. So it looks like, okay, Restoration Hardware and Taiwan Semiconductor. Is this a retest masterclass? And then the question is, will Baba rocket in Q4? And then there's a bunch of others, like, I'm gonna cut it off right there because the question is not fully formed, but basically it looks like the question is to do some technical analysis on Restoration Hardware and Taiwan Semiconductor.
Okay, so let's look at TSM first, and I'll go ahead and fire this up. Apparently it may be me having some internet issues in my area, but we're still gonna press on through it. So interesting thing here is, look at how many times, just from me immediately just checking this out, we pinged this level here of 108. Yes.
Okay.
Yeah, so we pinged this level of 108 officially now 4 times. And it's interesting here because we also have this like kind of like gap here in between from that level going up to the next. So I would definitely be watching this, you know, and moving forward because it seems like we almost closed there, but essentially we kind of fell back in TSM. So essentially I think here's the deal here and in looking forward. So one of the things to look at for TSM is definitely all eyes are focused towards China. And of course, you know, China, like mainland China, has definitely been looking to definitely like really ring in Taiwan, which is where home base for TSMC is located. And there's been still some resistance towards that because of the fact that they still want to remain independent. Now, of course, it's kind of like doing this fiery dance in public, but I think in the grand scheme of things, we'll probably see Taiwan come into the reins of mainland China under China order. And so I think that that's causing a lot of it's been causing a lot of pressure on the stock, especially alongside with other Chinese-based companies because the government this year has just gone completely ham, and on a like kind of like a take no prisoners kind of mentality. No shade included there. So I would definitely say, in looking at Taiwan Semiconductor, I would definitely be waiting for confirmation. So my confirmation, if this were myself, I'd be waiting for confirmation around here at the level of about 111, 110 to see if it can actually wake itself up and get back into the order of things. My best case is I think that it will. It's just going to take some time, and I think that there was definitely rebalancing that took place alongside with it moving with the overall general purpose of the semiconductor market, which went into correction. So I think that here we've done this period of consolidation. So in my best case, I'd definitely be looking at the 110 arena to look for to see if we can come back up to that, and if we can come up to that and show that we can hold that, I would definitely be looking to be a buyer here. If not, then essentially there could be some pain ahead with more legs down to the downside. So all in all, be cautious, but yet at the same token, look for confirmation. Currently, right now, here's your signal that it has not broken this range here, which is it seems to be a steady area where buyers step in. So I would just be looking for confirmation over the
When you said range here, what's the range?
Oh, range here of 108 and some change. So 108, let's say 108.04. I would use 108.04 for TSM just to say, okay, hey, this is a place of support and making sure that it doesn't break that. So the signal is that I've got 4 confirmations that the stock has now landed and touched upon there and rested and then bounced off. So I'm looking for that confirmation to see if TSM can do that. If it can, then great. If not, well, yeah, there, like I said, more potential downside risk.
Okay.
And then Restoration Hardware. With Restoration Hardware, we've kind of like been seeing the same thing, except that it kind of broke past this level that it's normally been accustomed to trading at, though that it did come back up to another quasi support level here at I think it's what, 638.83 or 6, well, it's at 635.50. So essentially here, the next level here would probably be around the 599, so let's just roll it at 600. So seeing if it breaks that, it still hasn't touched the 200-day moving average, but in my opinion, I think that it is looking at we may be possibly be bouncing back up and coming back up to this side. Now remember, you will face resistance here at around 650 for Restoration Hardware, and it's funny because history is having a habit of repeating itself. Last time when I talked about Restoration Hardware, I think it was around the time here when we did it in July, and then essentially we bounced off, and sure enough, you know, we've come down to the downside again. We filled a gap, and so I think that here is definitely where you see a signal, but yet at the same token, again, you're waiting for confirmation here.
Here's a question. If Flutter, which has a stake in FanDuel, decides to IPO Fan, what impact could this have on DraftKings?
I think that can have a significant impact. I mean, the thing is that a lot of folks have been looking at DraftKings and, many of those services. But keep in mind, if you had to choose between DraftKings and also going out to like even like betting systems like Las Vegas Sands or, Caesars, all those, honestly, don't count those out, though that they may be down now. But as soon as we start to see that the worst is behind us on the pandemic forefront, DraftKings is definitely going to run into some significant headwinds. So I just want everybody to be cautious about that and looking forward.
Okay. Here's another question. Thoughts on what? Oops, excuse me. I'm not ready for that one yet. Has market volatility changed the way or changed the market? Do you or Mark take profit on leaps faster now?
Do you want to answer this question or should I?
I'll say my piece. You can say whatever you want.
Okay.
For me, the profit taking depends on your strategy and what phase of your portfolio life journey you're on. So, for example, as of right now, your girl is in heist mode. Okay. So what that means is the market, thought they were cute. They took a little bit of my coins and I was like, oh no, we're not having this. And so for me, it's taking profit sooner than what I would normally take it. So I usually take profit a little over the 100% realm. So I get my 100% and then I'm out and I'm repositioning to another position because I'm building back up what was lost. Now for my longer term portfolio, it's completely different because my strategy there is more on the lines of scale. And so with scale, you're looking for that bigger payoff. And obviously, we won't talk about all that right now, the intricacies of all that. But the point is profit taking depends on the strategy that you are employing. So some people are taking 40%, some people are taking 50%, get it how you live it how you get it, get in where you fit in. All those, phrases apply. And again, you are the expert of your portfolio. So
correct.
Before you get in, you should know what profit,
what your exit is
to get exactly. So if that's 100%, well, then that's your plan. And if you don't see it going to 100% and then it just keeps topping off at 80, well, maybe that's all you're gonna get, so you got to think about what your strategy is and don't be going into things, blindly. But that's what I'd say. Your profit taking depends upon your strategy. It's not necessarily the market. Because if you base everything on what the market is doing, as opposed to like your strategy and what, you've researched and, what you see, you can fall for the okie doke and sometimes you'll be taking profits too early. So for me personally, it's more of an art and not necessarily a science. But what do you want to say, Mark?
You nailed a lot of it on the head. Kudos to you. So, I mean, not very much to add there. I mean, honestly, your strategy is your strategy and your plan is your plan. Before you even hit the buy button or trade button, you definitely need to have a plan of it's always easy for everybody to set forth a plan of entry. And then it's always somewhat harder for folks to have a plan of exit. Let me give you an example. If you went to a party and you only knew that you and your friend were going, but you didn't know anybody else was there, and it's in a completely different area that you're not accustomed to, you have a plan of how is it that you're going to show up to this party and how is it that you're going to act at this party. Then after that, it's that you're going to run into certain types of risk assessment there to say, okay, hey, if this go down at this party, I'm out of here. You are it's kind of interesting, exactly where the exits are, exactly okay, hey, you do a quick scan of the room to see, okay, hey, who's who or who is it that I'm getting a vibe from, who I'm not. So essentially, if you have done that, then essentially your exit strategy. Same rules apply. So that way, if anything pops off, it's you do not deviate from the plan. You're at the exit. And the same thing needs to apply when it comes to your investment. So if you have an entry planned out, but yet you don't have an exit, that's a problem. And I guess the best thing that I would tell anybody is, even if you're up, I mean, either come up with an exit strategy, even if you're up or down, come up with an exit strategy. If you don't, then you need to just pull money off the table and literally just like go back and restructure it. I know that it's going to suck in the beginning because you can see your position go even higher though that you're not even in it. But yet at the same token, if you do not have the discipline that carries you, if you do not establish the discipline, a broken clock works twice a day. So, the question is that would you rather have a better chance at being more successful and having a sound strategy and a sound be, happy with winning on luck?
Yeah, a little bit, Mark.
Say that again.
I didn't hear the last part.
Oh, it's just pretty much. Would you rather win on strategy and planning, or would you rather win on luck?
I mean, it depends on how much that luck is. Now, I'm just kidding.
Okay.
Yeah, I get you. Okay, so.
But remember this: if you don't have a plan, or a strategy, what happens when, say, for example, life throws curveballs? Like, shout outs to Q, when men make plans, God laughs. So essentially what happens when, say, for example, the market responds back in kind. If you don't have a strategy, if you don't have a plan, then you're just out there.
Gambling. Hello. Okay, so next question. Will the mandates have any impact in the market?
I take it that we're talking about vaccine mandates. Personally, I don't. I think that in some cases they will have issues, but then again, it's like I don't think that they're going to be everlasting issues. I think that ultimately it's like things are going to get a little bit more. You're dealing with a lot of FUD, fear, uncertainty, and doubt early in the beginning, and that can cause a little bit of volatility that drives. But the thing about volatility is it doesn't last very long. So essentially, once when those things start to work themselves out, and ultimately people get into the swing of things and just accept the fact that this is the new reality. And I think that we're going to be heading this way anyways, even if there was or wasn't a pandemic, because the technology was always there. So, I mean, honestly, markets always bounce back. Markets are ultimately, they forget. Like the best example that I always use is, it can be a little bit morbid, but it serves the point. John F. Kennedy was assassinated. That day, the market dropped by like 1% to 2%. The very next day, the market rebounded. It goes to show you how much really the market tends to care.
Cold-blooded. All right. Hey. Your thoughts on what company has led in robotics to help with supply chain issues?
Which company has led? I don't know. I mean, because I don't know if there's actually a clear distinctive winner there. I mean, we've heard of some good companies out there. We've heard of some companies like, I would want to know like, okay, hey, how is Boston Dynamics moving through? Though that I know that they got acquired by Hyundai. So it'd be interesting to look there and then, start making my way as it pertains to like who are the competitors within that space of robotics. Because I mean, I think that they reign supreme when it comes to robotic technology. But then again, they only sell X amount, so that's something to be mindful of. I'd also look at who are the suppliers that Amazon went through for its robotics, because Amazon's the type of company that they just don't announce something without essentially having a clear and obvious plan when it comes to supply chain and logistics. So I would look there as well.
Another good place to look is on what was it? The app
Strategic Intelligence. Yeah, Strategic Intelligence will allow you to essentially get to know who some of the players are and what areas are those supply chain and logistics really starting to take place. Go ahead, read on up on it. We should bring somebody in from supply chain and logistics.
Totally, that'd be a good time right there. Is it likely we see a tech correction this year, given that we had one in 2020 and 2021?
Well, corrections typically take place at least once a year. I mean, it doesn't have to be all at once. It can technically be sometimes on aggregate. But nine times out of
Mhm.
10, it's like you normally see your average 5% pullback. Pullback used to be 95 days for 5% on the overall index. We're moving through that a lot faster, clearly. Um, so yeah, it's very possible that we could see a tech correction every year. I mean, you kind of like just expect it. You expect like what we call September and October garbage months in the beginning, where it's just like, okay, hey, things get terrible, but then now it's pickup time. So
Mhm.
you know, some folks even say that, you can kind of like look at, like, for example, Jewish holidays and kind of like connect them to, you know, what takes place in the market during those time periods because you have a lot of holidays. Eh,
Mhm.
I just look at it from a pure historical basis. Typically, we normally have a correction of anywhere from 5 to 10% pullbacks on a yearly basis. So you can kind of average it out from where we start when the first correction took place. You can kind of like think that, okay, hey, over the next 10 to 12 months is going to happen again.
All right, there you have it. Who has the better upside growth,
Oh.
Nvidia or AMD within a 2-year time frame?
Um, that's tough. That's tough because Nvidia has the forefront on AI, but then at the same token, AMD has the leg when it comes to working with other partners and really moving forth in the space of cloud services. So that's going to be very, very interesting. We haven't really heard anything about Nvidia Drive, so it's like I can't really put a lot of stock towards that yet. I know that they once upon a time worked with Tesla, and now they're working with Mercedes, but
Mm-hmm.
don't know. If I had to just go out there on a limb, I would say AMD because the one stock is technically quote unquote cheaper from a certain perspective. Um, and on top of that, it's like there's way more headlines that are coming out for AMD that support it. And you can make the case that Nvidia could be a little bit more pricier and that a lot of its good news is still already priced in. Like a lot of folks don't know about what's happening, a big announcement that's going to be made in January that pertains to AMD. They just don't know.
Well, someone just asked, well, not just asked, they asked it earlier. The Xilinx deal, does it happen by January?
I think so. I think that they will close the deal before this year is out. I think that the official announcement will probably be made in January, if that. But that's not the big announcement in January. Something that you should look at is TSM isn't the only supplier in town when it comes to designing of chips. And on top of that, it's like since if AMD can't be in Apple iPhones, it can definitely go towards Apple iPhone's biggest competitor and provide chips there.
Mhm.
So there you have it. There's your clue.
Alrighty then. Okay, would you make an exception for the wait for 2-year history rule on Rivian shares slash options? I
I
love
knew that this was
conflict.
going to be coming. I knew that the company is going to be raising about $8 billion on its IPO day. Like, that's the biggest thing. And then on top of that, um, you know, looking at Rivian, I think that honestly, legacy automakers are in trouble. They are in great lengths of trouble. You just saw Lordstown Motors got downgraded to $2 earlier today, so that's interesting. So I guess we can officially say that that race is over.
Yeah.
um, when I look at GM, Ford, and everything else, it's like they fully haven't really bought into the electric space. And Rivian does provide a significant competition. And look at the amount of capital that it can consistently bring outside of just providing, pickup truck and SUV. Keep in mind they work directly hand in hand with Amazon, and I'm probably sure that they'll gain other contracts with other logistics companies or other partners when it comes to their vans that are now electric and hitting the markets. You've probably seen them out there on the streets. So honestly, if we're talking about shares, Yeah, I mean, I have no problem with that. If we're talking about options, I mean, it's like that's buyer beware, trader beware. So definitely, you definitely want to see how the stock moves first, and then you have to wait anyways for the 60 to 180-day lockup period before you could do anything anyway. So, I mean, honestly, just sit back and gain some perspective the entire time. 60 days to learn about exactly what the company is doing, where it's going should be good enough, but at the same token, just back test it and even do further due diligence on looking at what the future looks like for Rivian. Where's the
Okay.
opportunity? Because its vehicle is kind of pricey, so the biggest challenge for Rivian is bringing down those price points, but keeping those margins up.
Yeah, I was gonna say, what are their margins looking like?
Margins are looking good, but at the same token, you know me, I'm definitely gonna say that they can always be better.
I mean, always, yeah.
They can always be better. So it's like, you sell a vehicle at $70,000. I mean, that's not bad if you're coming in at about a 25, maybe 28% profit margin. But really, the sweet spot of where you ultimately want to be is up there in probably like 30, 35.
Okay. Oh, sorry. Bringing it back to Xilinx. Does everything going on in China mess up the Xilinx deal, being that they are the last vote?
Nah.
Okay. Oh, this was a question about, I think this was something you had mentioned on a previous episode.
Okay.
Why do you think ARKK Holdings will recover in 2022?
Because I think that a lot of
chart too.
well, what does this have to do with a chart if I'm talking about fundamental basis? But
I know, but well, talk about the fundamentals, but then also
I will. Okay. One moment, please.
And we have 4 minutes.
Oh man, so much pressure.
Well, really, you got 2 minutes because we got to sign up.
Okay. All right, so fundamental basis here, and I kind of wrote it in my thesis on Twitter if you want to check it out. I actually did my prediction for moving forward next year. I'll try to keep doing that moving forward. One of the biggest challenges for ARK this year was the fact that you had a significant amount of run up last year, and it beat out every single other ETF. The other challenge is the fact that the way that the ETF is set up and how it was registered, they have to report exactly what is it that they're trading. So essentially, Kathy Wood and team definitely shares exactly what is it that they're trading, and essentially how much are they buying and everything else. So many of us look at that as a transparency thing, and that's dope, but it's actually also how the ETF itself is set up. That's the first thing. The second thing is that when we look at an ARK, one of the biggest hitters to ARK, the biggest blow that it took this year was definitely Teladoc. After the whole Livongo acquisition, Teladoc has just never been the same, and I think that Kathy Wood and team are kind of trying to hold out for it to receive some type of return value on that position, so that way all is not lost. But I also predicted that if Teladoc's thesis cannot make a turnaround, Kathy Wood and team will just have to drop a Teladoc. A lot of the companies that you see within here, within the ETF, definitely high growth. I definitely strongly believe can be S&P 500 companies and will be in the future. I think the thing is that next year, since we've had a choppy year and underperformance, I mean, my base case is that essentially you're going to have some of those other companies that had a choppy year that have been significant runners within ARK. They will probably have rebound years next year, especially as their thesis starts to solidify and starts to show the market that, hey, that we're just not a one-trick pony. So that's definitely my thesis for ARK in moving forward. The biggest thing that it rides on is, of course, Teladoc, but then at the same token, you have other companies in there like Coin and Hood that also kind of pose some challenges along with DraftKings. Those are definitely plays in which that we understand that these are areas in which that a lot of millennial traders and maybe even Gen Z investors like. The question is that are they sustainable, especially in an economy that's essentially starting to roll back around? And I agree to a certain degree, though, that I'm kind of 50-50 on some of those stocks, but on the others that have been major players, I have no doubts about them. I think that they've just had a bad year. It's kind of like when you look at an athlete, and again, shout outs to Q, if you look at an athlete that has had, a typical career average of, let's say, 23, 7 and 7, and then one year they have, say, for example, 19, 3 and 4, are they a bad player or did they just have a bad year? I think that what we could say is that they just had a bad year. And honestly, it's like, I see no stopping in it. And it's like, keep in mind, Kathy Wood has had so much scrutiny for a company that is, or for a fund that's had to disclose every single one of their trades on an everyday basis. You ask any of the other funds out there to disclose that, they will not do so. And she's also had to live with the scrutiny on an everyday basis. So again, my thesis says that essentially that, ARK, the companies that are within it, they're definitely still strong. There's definitely still strong upside. It's just that the fact is that they had a great year last year, and a lot of folks decided to take profit and shave off the positions. And ultimately, that's one of the natures of the beast when it comes to ARK. And then, of course, you had folks that you saw a large amount of outflows that came out of ARK in this previous, I think it was this previous month or this past quarter of a span from 2017, where the stock was once trading at $20.69 all the way up to 109. That's a great run. That is a great run. And I still believe that essentially that this run is not, they've had a great run, and I believe that I still believe that there's still more upside for them in the future. Sometimes you just have to go through those growing pains in the process.
All right. And speaking of process, the time is now 6:30. So that's all she wrote.
All right. Well, y'all, thank you so much. And ultimately, we hope that you guys have been able to gain some perspective. We hope that you were able to learn some things because, we try to give you pretty good conversation and ultimately challenge you to think about things a little bit differently. Until next time, we'll see you on Thursday. I'm Mark Monroe.
And I'm jolyngc in the place to be.
And this was, hopefully for you, a come up. See you in the next one. Peace, y'all.